Hello and thank you for joining us on Global Business, bringing you the latest developments in the constantly changing business landscape here in the African continent. From Nairobi to Johannesburg, from Cairo to Lagos, we will be bringing you entrepreneurs that are hitting the headlines. I'm Penina Karibe in Nairobi. Coming up on the show tonight, leaders of the 21 member states of APEC have concluded their meeting in the Chinese capital. We have the details. And this year's edition of China Singles Day breaks sales records. Plus, later on, we will be live in Dakar, Senegal for an update on the Africa SME Champions Forum. Right, so let's start with the APEC summit in Beijing, where the leaders of the 21 member economies have concluded their meeting in the Chinese capital. A declaration on the roadmap of building a free trade agreement in the region has been approved. Also endorsed are a number of initiatives to boost the regional economy and fair trade. The leaders have pledged to deepen cooperation, support open trade and strengthen connectivity. Han Bin reports.
Late autumn, the season of harvest. And China is reaping the bounty. The country has once again taken center stage as President Xi Jinping welcomed the APEC economic leaders in Beijing. APEC has long been an open forum for talks, but this year's meeting seems to be a bit different. More initiatives have been proposed, some of them are breakthroughs, and despite differences, consensus has been reached.
We should build APEC into an institutional platform by promoting integration, a policy platform based on experience sharing, and an open platform against trade protectionism, a development platform to intensify economic and technical cooperation, and a platform for boosting connectivity. China will donate $10 million to support APEC institutional and capacity building and practical cooperation in various fields.
They don't vote, nor does the declaration have any legal obligation, yet it's a commitment to work on some things they have approved and some things on which they still disagree. The biggest achievement is the adoption of the Beijing Roadmap for the Free Trade Area of the Asia-Pacific, a commitment to push forward the process, though there is no clear timetable.
We decided to initiate the Free Trade Area of the Asia-Pacific and approved a roadmap to materialize the FTAAP, marking a historical step toward building this inclusive free trade area and symbolizing the official start of the FTAAP process. It showed the APEC member economies are confident and determined to promote regional economic integration.
Also, strengthening regional partnership that could help build the new Silk Road and improving regional infrastructure development. China believes connectivity is the key. This concept is endorsed by the Beijing Declaration. APEC leaders also adopted the Beijing Anti-Corruption Declaration and set up a cooperation network for dealing with transborder cases. The network will become China's new weapon in fighting graft. A tradition and a symbol of harmony, the 2014 family photo, a memento of APEC's late autumn achievements in Beijing. With many new initiatives being endorsed by the leaders' declaration, APEC Beijing meeting is widely seen as a successful event. China's proactive policy has created positive results. Whether what is being agreed in Beijing will eventually come into being is a test of the relationship of the APEC members and also a test for China's real influence in the Asia-Pacific region. Han Bin, CCTV, Beijing.
To many people across the world, APEC may be a big, abstract geopolitical body, but just how do the economies of member countries affect each other? To answer that question, we take a special look at one APEC economy's impact on China. Chile's wine exports ranks fourth in the world by volume, and its wine has been dubbed the country's ambassador to the world. Thanks to free trade deals signed with China, Chinese consumers can soon buy Chilean wine with no tariffs added.
Chinese consumers may soon see bottles of Chilean wine in their supermarkets with affordable price tags. And when I say affordable, I mean around 20 yuan, such as this Vina Oveja Negra, an everyday wine on Chilean dinner tables.
Well, Cabernet Sauvignon is the king of the grapes, so it's a very strong, powerful wine. It's a wine that you can keep aging for 20, 30 years. And then Carmenère is matched very well with the spicy food, so maybe with Sichuan food or this kind of Chinese dishes would be very, very good.
China and Chile signed an agreement at the 2005 APEC meeting to gradually remove tariffs on goods traded between the two countries. In 2012, the two nations signed supplemental agreements that allowed the tariffs on Chilean wine imports to be removed starting from 2015.
Zero will help us also to promote our best wines. For expensive wine, probably you will reach same prices that we have here locally in Chile. We're talking about wines that are 100 US retail. In China, it should be 600 RMBs retail price. What we call icon wines here.
As the free trade deal unfolds, Chilean agricultural products such as cherries, salmon and pork will be allowed into the Chinese market. Meanwhile, Chinese garments, home appliances and toys will be allowed into Chile. Lolo, CCTV.
To round off our focus on the APEC summit, one of the traditions of the annual APEC leaders meeting is the family photo, with visiting leaders donning the national dress of the host member. At the 2001 leaders meeting in Shanghai, APEC leaders wore tang jackets. 13 years later in Beijing, that tradition is playing out to cement China's place in the modern world. Our reporter Liu Yang takes us through the design and technological process that enabled the national dress come to life in our What's Hot segment tonight.
Designing the costume for APEC leaders is not simply about creativity and a deep understanding of the Chinese culture.
How to combine the concepts of traditional Chinese clothing design and modern clothing design. We want to show the country's power and its inclusiveness.
It took a year of countless design changes, even down to the details of the buttons, until opening night. The 21 APEC leaders and their spouses debuted new designs at a banquet at Watercube in Beijing. Menswear designer Chu Yan explains her understanding about the symbolism of this year's design.
In the design, we want to show the elements of traditional Chinese culture, the beauty of its clothing. We also want to take this opportunity to show our country's cultural confidence and the national self-confidence. As I've just mentioned, many of them are our design philosophy. For example, combining China and Western style and drawing lessons from our Asian history. For example, this time's highlights are the collar, placket front neckline and raglan sleeve. 13 years ago, the designers used a more Western-style cut. This time, we've gone back to the traditional Chinese design, using the raglan sleeve.
And for a female leader, designers say the choice of the color accounts for the important part of the design.
The design for female leaders to show her authority, but at the same time to differentiate her from the male leader. For example, this time we'll use rose red and peacock blue. It's very pretty. The design of the wide skirt dress, which is in accordance with the Hanfu bra sense. The movement of the clothing is loose and comfortable, and it's very convenient. And the lines and the scale of the skirt are quite perfect.
在这个摆渡的廓形，包括袖的廓形上面，都是尺寸的把握。
Starting last December, the APEC Leaders Clothing Design Team received 455 proposals sent from the top designers across China. In March, after serious months of evaluation, 60 proposals were made into samples. In May, 35 sets of samples went on for in-depth designing. These are all the clothes designed for the leaders and their spouses. All these designers say this is a great opportunity for the Chinese fashion industry. It also opens new possibilities for more innovative and developed fashion design here in China. At the end of October, the manufacturing and packing work on the costumes for APEC leaders and their spouses was secretly completed. Designers say they hope to use this opportunity to show the essence of Chinese design in the cultural elements. Liu Yang, CCTV, Beijing.
Away from APEC, but still in China, the once-a-year online shopping frenzy in that part of the world is here again. November 11th is Singles Day. In recognition of the day, young singles organize parties and karaoke to meet new friends or just try their fortunes. It has become the largest online shopping day in the world. It's also the day when many online retailers provide massive discounts and reap huge sales. So this year's Singles Day is no exception, and it's been another record-breaking day in terms of sales volume for e-commerce giants. Just how crazy have things been this Singles Day? Well, get this, just 3 minutes into the day, sales on Tmall.com, that's Alibaba's online shopping mall, hit 1 billion yuan, just about $163 million. By 1 p.m., that number had soared to 36.2 billion yuan, or $5.3 billion, and smashed last year's sales volume for the entire day. Now, big brands such as clothing retailer Yukio, home appliance maker Haye, and smartphone maker Xiaomi all have enjoyed sales volumes of more than 100 million yuan, or $16.3 million this time around. All right, let's have a look now at the markets at this particular hour. Nigerian stocks have ended their longest losing streak since January 2009, rebounding after a sell-off prompted by concern that lower oil prices would cut revenue in Africa's largest producer of the commodity. That was yesterday. Today, Nigerian stocks climbed the most in a single day since May 30th, in the second day of gains after the main index in Africa's biggest economy that ended the longest sell-off in almost 6 years. The main index advanced 1.3% to, well, you can see there on your screens, 33,670.75 by the close of day in Lagos. Still ahead here on Global Bees, the Africa SME Champions Forum is on in Dakar, Senegal. We will be live with the details after the break.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Welcome back. Now, governments have been urged to engage more with private firms in order to make the reforms needed to enhance the growth of small and medium-sized enterprises across Africa. As Roman Yang reports from Senegal's capital, Dakar, however, there are different schools of thought on just what governments must do to make it easier for SMEs to thrive.
Let's start by addressing that question of funding. Should governments in Africa spend more money putting seed capital up for small and medium-sized enterprises? If you happen to be the CEO of Ecobank, Albert Essien, the answer is yes. Orthodox economists, however, will argue that that's a bad way of spending scarce capital. Every dollar that you lock up in seed capital provision is cash that you can't then use in providing other things that are actually needed by SMEs. Better roads, better power, a more efficient legal system, things of that sort. Bankers, however, have come under quite a bit of fire on the first day of this particular forum. SMEs are complaining that they're simply not getting the funding that they need. However, the real picture is a bit more varied. Banks in East Africa, for example, do lend more to SMEs as a percentage of their overall portfolios than their counterparts in South Africa and in Nigeria. Why does that happen? A couple of reasons. In South Africa, 80% of the assets in the entire banking system are concentrated in just 4 banks. And for that reason, they simply have no incentive really to move out of their comfort zone. In Nigeria, oil and gas dominates the entire economy, and for that reason, most of the banks have structured their lending practices aiming for that sector. There's still a lot of work to be done in making access to finance a lot easier for SMEs. I'm Ramanyang in the Senegalese capital of Dakar.
Right, and as indicated, CCTV's Ramanyang is in Dakar, Senegal, at the Africa SME Champions Forum. Now, this forum aims to focus on concrete solutions to the numerous challenges facing African SMEs. Rama, from what we gather, top on the agenda at the forum is the question of how to go about closing the SME credit financing and management skills gap in sub-Saharan Africa. What are the experts saying?
Yes, indeed. Those are some of the key issues that are being focused on at this event. And with respect to the question of the skills gap, let's get you an expert who actually knows something about it. I'm now joined here by Didier Acotier, who actually runs AfriSearch, which deals, as I understand it, with getting talent from elsewhere around the world that is African and connecting it to businesses that do need that talent on the continent, correct?
Indeed.
Let's start with that question of the skills gap in Africa. Is it in existence? How big is it? How can it be filled?
It's quite huge, the technical fields. The thing is that our countries have been training people in social sciences, in economics, but not in science. And right now, with all the transformation that the continent is going through, we need more engineers, more technicians for infrastructure projects, roads, companies that can transform raw materials, that can produce. So the gap is huge. For instance, we have conducted a survey over 12 African countries. Can you imagine that out of 1,000 universities, training centers, only 50 were able to produce the talent the continent needs to support the growth, the transformation. So the gap is huge.
Right. Moving on, though, to what we discussed a little earlier in the conference, the question of closing that finance gap. Bankers came in under a lot of fire today. I mean, what were the initial impressions of that particular discussion, the question of access to credit?
Well, the discussion was great. What I can get out of the discussion is that banks, they have the money. They are very liquid. Then you have SMEs, private companies that need the money. The thing is that banks are saying they don't have enough, let's say, capacity to manage the credit they'll be providing to these SMEs. They don't have the right skills. They don't have the right organization.
They don't have the right information.
The right information. So basically, if you can provide those SMEs some capacity building programs, some guarantee funds, I think we could close a little bit the gap. And also probably, when I look at some African companies, the small one, from the recruiter perspective, sometimes I find out that the entrepreneur has brilliant idea. Project is great, but he doesn't just have the right people on board to tell him, actually you need credit, or you need private equity, or you need to go to the market, you need to get listed. So basically they need to find this ecosystem with the right people working in the company, but those people, you have to pay them the right money. And that's another issue.
Without the cash, they're not going to come to you.
No cash, no talents.
Right, simple and straightforward. We've had the BVRM CEO in one of the sessions earlier today. Stock markets have come out fairly strongly at this particular event. Private equity, not so much. Where are the private equity guys?
They were there. We have Afid Fund, we have ENP, we have like 6 to 7 private equity firms who were there, and the stock exchange as well. Private equity, the good news is that now you have more and more focusing on small companies, SMEs. Have you heard EAP? They even said they can come with $50,000, $100,000. Because before, most of the funds, they come like, okay, if you need 5 million, 10 million US, we'll give it to you.
So they've had to learn how to downscale to deal with African companies.
Yes, they need that, and to understand the market. Even from the banking perspective, banks don't understand the African market. Even African banks. That's a real issue.
But to put it, I mean, for anyone who's watching this, the question will be, yeah, but you operate in Africa. How can you not understand the market yet you're here?
Because you design your model based on another model. Basically, most of those banks, remember, we not used to have African banks before. There were European banks from France, from UK, US eventually, with the criteria.
Yeah.
But now, as we're having more and more African banks who understand the markets, who understand how they can mitigate the risk, it's changing the dynamic, and we need more of that.
And it certainly will be coming through. What should we expect from this event tomorrow?
3 things. First thing, let the SMEs understand how they can address their financial needs, whether it's a bank, private equity, guarantee fund, to understand the ecosystem. Second thing, to network with each other. Because sometimes they bid for a big market, a big tender, but they're just too small. So how can they get get one with another and bid together so they become bigger? So this is another lesson. And third thing, I think we need to have this continental perspective, go out beyond the borders. A company from Senegal should operate in Kenya. A company in Tanzania should come to Cameroon. So let's make it continental. Regional integration, it's one of the keys as well. And I hope some of the companies who were there will understand that Africa is a big continent.
And
they can go wherever they
place.
want.
All right. Brilliant. We'll have to leave it there. Thank you for your time this evening.
Thank you.
Penina, we've been speaking to Didier Akoté, the CEO of Afrique Search here in Dakar, Senegal. We'll be here for the next couple of days as well, running around the country, seeing what Senegal has to offer, talking to entrepreneurs and business owners on this part of the continent. Back to you.
Oh, many thanks, Ram, and indeed we shall be looking forward to that tomorrow. Now, the South African mining sector has been characterized by strikes in the platinum sector during the first half of 2014. According to the 6th edition of the PwC South Africa Mining Report released by PricewaterhouseCoopers, the financial performance of the sector was low-key. But it's not all bad news. The market capitalization of the top 37 mining companies listed on the Johannesburg Stock Exchange in June increased marginally from $54 billion to $61.3 billion, while platinum and gold mining companies recovered on the back of the weak rand versus the US dollar. However, between June to September, this sector lost another $11.8 billion.
Number one, significant impairments by mining companies in South Africa. Impairments increased by 145% to 49 billion rand. Secondly, high costs, which are putting pressure on margins. So companies out there in the mining sector are finding it more difficult to generate profits on a consistent basis.
In our local industry, the iron ore has been a success story for the last few years. They've been able to increase production, increase local infrastructure in order to get that production out to export markets. So that's been a trend of the last few years. Clearly, the lower commodity prices for iron ore and coal and the like will impact that production in the future. It'll be interesting to see where that comes from. We were quite pleased that for this year that gold actually had a slight improvement in production as well. There's clearly a focus applied at the lower level, and hopefully that will come through into future results.
Right, so when it comes to commodities, there's really no point in belaboring what happened today, with Brent crude falling to the lowest in 4 years on speculation that global supply gains are outpacing demand. Producers continue to hurt while consumers the world over watch the price barometer with glee. Still ahead, tales from the bush ladder. We bring you the story of a Kenyan chef who's making waves internationally. You're watching Global Business. Welcome back. Kenyan food, customs and cooking are being shared with the world with the help of a homegrown celebrity chef. We meet Kiran Jethwa, who runs 2 successful restaurants in Nairobi and is also the face of a popular international television show, Tales from the Bush Ladder. Tonight on Grassroots, we see how just last week he came close to winning the Association of International Broadcasting Best TV Personality Award.
Kenyan celebrity chef Kiran Jethwa is on a mission to show the world there's more to his country than just great safaris. Through his cooking show, Tales from the Bush Ladder, Jethwa takes his viewers on journeys through Africa, showcasing the continent's extraordinary produce and unique culinary traditions. Jethwa will eat anything from cow blood to mud crabs. Tales from the Bush Ladder was such a hit, National Geographic bought it, the first local TV show to be exported to the international market. He was also recently nominated for the AIB International Television Personality Award.
You know, the stories that we've told have been received well, and I guess it's coming through like this. I never got on television to be on television. That's never my plan. You know, it's not the reason I do what I do. It's to tell people stories, genuine, uncontrived. This is the way it is, and it's just nice to be nominated.
He wants to open minds and change the palates of curious tourists, urbane Kenyans and bush tribesmen.
For me, it's to learn and to teach as much as possible, and hopefully, slowly, try and show people on this continent how they can be a little bit more creative with their food. And slowly, that's how food culture, that's how it goes. You know, that's how people learn how to cook, how they diversify. It's experimentation.
When he's not filming, Jethwa can be found in one of his upmarket Nairobi restaurants. His colleagues say fame hasn't really changed him.
The only difference is that his celebrity status has changed, how people perceive the restaurant, how people perceive him. They look at him differently, but to me, I see him as my boss. He's the same person I started working with.
Through his travels, Jethwa is developing a deep appreciation for where the food he cooks comes from.
We try to take the view to the source of food, and you know what it looks like, where it comes from, you know, out of the ground, out of the sea. You know, what is it? You know, what is the source? And so many ingredients, even as a chef, that you don't actually know what they look like in their raw state or their unharvested state, or how they're grown or how they're caught, and you get a massive appreciation for how hard farmers, fishermen, whatever they are, how hard they work to get those ingredients to market and for us to eat.
His is a venture that's truly putting him in touch with the grassroots. Valdi Karolsa, CCTV.
All right, a quick check of the currencies now. The Kenyan shilling retreated to the lowest level since December 2011 against the dollar on bets that the East African nation's trade deficit will widen as tea prices decline and balance curbs tourism. The shilling bounced off 90.10 to the dollar before recovering slightly, with the Kenyan central bank in the market to lend support. The shilling's move is far more muted than the naira's recent tumble and certainly more sedate than the Ghanaian cedi's 26% collapse against the dollar this year, partly thanks to the Central Bank of Kenya helping to support the currency by mopping up liquidity through the repo market. All right, so tomorrow here on Global Biz, the largest ever U.S. business delegation was in Egypt to discuss business opportunities in the country. We shall be bringing you updates on that. And we'll also focus on the business of shea butter in Benin. Well, that's it for this edition of Global Business. To send your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa, and you can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm Penina Karibe. Thanks for watching.